afternoon. Thank you for joining us. My name is Mahalan Iberg, and I'm the Small Business Services Coordinator at ANCA. I'm also joined by Lauren Richard, who is our Small Business Program Director at ANCA. And this is the fourth, I think, session
Mhm.
in our financial empowerment webinar series for small businesses. And this one is on keeping business and personal finances straight. I'm going to hand things over to Lauren to introduce ANCA a little bit and then introduce our panelists.
Thank you. All right, so we're going to share just a couple slides with you. Some of you may have seen these before, but just in case, we want to tell you a little bit about what ANCA is and what we do and all of that good stuff. So ANCA stands for the Adirondack North Country Association. We're a nonprofit, non-governmental economic development organization established in 1955. We have 23 staff, and our headquarters is in Saranac Lake, New York, but our staff are located across the region. We have some remote folks as well. We serve the 14 northernmost counties of New York State, which are these counties right here. Our vision is a North Country for all. We want to build prosperity across northern New York and create and sustain wealth and value in local communities. So we really care about making sure everybody who lives here can feel like they are living a good life. Our work is funded in many different ways, including federal, state, and local grants, philanthropic dollars, event fees, donations, and memberships to keep us working for you. So your participation and support are greatly appreciated. You can learn more about this if you're curious on our website, adirondack.org, under support. So we have all kinds of other upcoming events and programs. I think some of you already know about them because you've signed up for more than one, but you can see them on our website, again, adirondack.org under the events section. But for example, we have some more of these sessions coming up. I think we have 3 more of these with some other topics, including employee benefits for small businesses, future planning for you and your business, and insurances to be familiar with as a business owner. We also have in late March coming up Adirondack Buyer Days, which is our wholesale trade show for micro and small maker businesses and retailers. And that includes a couple of preparatory webinars that are happening in February that are open to everyone, no matter whether or not you're coming to that show. So those are also on our website if you're curious about that. And then we'll share these again at the end, but this is just our contact information if you want to reach out to us for one-on-one support afterward or any questions that you have. Cool. All right. So let me just get back to my notes real quick. Okay. So I'm going to introduce our panelists. So thank you for joining us today, Jamie Cecilia at AEDC and Kim Mannion at ANCA. Jamie joined AEDC as the Director of Lending with a 20-year history working in finance and economic development as the former Chief Financial Officer of a $150 million credit union. Jamie has earned degrees in business administration, public administration, and economics. He also holds several nonprofit management certifications. Kim has degrees in finance and human resources, and she has worked in various corporate positions and lived in many places, including Egypt. Since her return to the region, Kim has pursued her passion for small business and small business development. She owned and operated Maui North Ski Bike and Board Company and worked at the Small Business Development Center. Working with small business owners so they can not only survive but thrive is at the heart of Kim's work passion. So thanks to both of you for being here. And with that, we'll dive into some questions for you. All right, so first, why is separating business and personal finances such a big deal? And when is it okay to keep things simple? Let's start with Kim for this first one.
So people own a business with the long-term goal, most often, of transitioning the business to someone else. And there are a number of steps that are involved with transitioning a business, and creating a value for the business is one of the top ones. For small businesses, the types of businesses that we work with, mom and pop, what we call Main Street owner operated type businesses, there's a number called seller's discretionary earnings that is a kind of the crux of how we do the valuation. And what that is it's basically all of the financial benefit that the business generates for the individual. As a small business owner, one of the benefits of owning a small business is the fact that you can run certain expenses through your business. They aren't operationally critical, but they are legitimate business expenses, but you run them through at your discretion. So again, thus the seller's discretionary earnings. And being able to identify which business expenses are kind of personal in nature, discretionary, versus those that are operationally critical is important. And so I'm sure Jamie will speak to some of the near-term concerns and issues with it, but the long-term, the long game says you really want to start to understand those to the best of your ability.
Thank you, Kim. Jamie, go ahead. Why is separating business and personal finances such a big deal? And when is it okay to keep it simple?
Sure. Kim, thank you for setting me up for the short-term answer. Speaking as a lender, the biggest issue from my vantage point is simply financial transparency. In reality, when you commingle personal and business expenses, it becomes far more difficult and challenging to get a read on how the business is actually performing. And again, as a lender, that's a red flag when we see the commingling of records in those situations. Again, it makes it a little more challenging to see if the business is profitable and just determine other metrics with regard to the viability of the business. I think too, from a liability standpoint, the vast majority of my small business clients are limited liability companies. And, kind of under that framework, it makes a lot of sense to ensure that you do have that segregation of personal and business records. Just from the standpoint of reporting, tax reporting, things of that nature.
Great, thank you.
Mhm.
All right, next. And just so you know too, we'll be putting these questions in the chat as well. So if you need a refresher about what we said, what the questions were, some of them were kind of long, so they'll be in
Mhm.
there for you.
Lauren, are
So
we
then,
are we opening up, like if folks have questions while we're responding, they can either unmute or put a question in the chat, or are we holding those till
we're mostly going to keep it till the end, but if
okay,
somebody really has a burning question, they're welcome to throw it in there too. That's fine.
cool.
Good question. Okay, so how should business owners think about paying themselves, especially when income is seasonal or unpredictable? And this tying back into keeping things, separate, like it's related, right? Because if you're going to be dipping into things that were going to be for your business, or things I feel like can get really messy, especially in those scenarios. If you get really, really busy or get really slow, conversely. So how can people think about paying themselves and making sure they're taking care of themselves in those kind of maybe less predictable scenarios? Jamie, do you want to take this one first?
Sure. I think whether you're paying yourself a regular salary or you're taking periodic owner draws from the business throughout the course of the year, um, I think what should be top of mind is making sure that you build your compensation into your planning. That could be your budget, that could be any sort of cash flow projections that you're generating throughout the course of the year, but make sure you're building your compensation into those numbers. And again, just speaking as a lender, um, compensation is one of those variables that keeps you engaged and more or less gives you a sense of fulfillment with running that business. And when the business begins to strain the personal finances of the owner and even the household, because you're not fully planning for your own compensation, it's going to have an impact in terms of, how long that business can potentially survive. In other words, how long you can stay in the game. So it's important to plan for that and make sure that you're compensating yourself, in a way that's appropriate based on your needs.
Great. Thank you. Kim, you want to take that one? Oh, you're muted.
I
Okay, yeah.
unmuted myself, but who knows? Jamie mentioned cash flow, and cash is king. I don't know if the folks who are on the call put a business plan together when they started their business, or if They have it, but if you have a really seasonal business, let's say you have a canoe tour guide company and you make your money from May to September, and you need to get through the winter, really understanding how much, like, you're going to be in the red all winter long because you don't have that seasonal income, understanding that, in order for the business to survive, you need 3,000 in December, you need 4,000 in January, you need 5,000, and like understanding what that negative number is going in so that when you make hay during the summer, you're not blowing through that money. So if you made 50,000 in the summer, you tuck 25 of it away, to be able to get through the winter. And I know that is seems very common sense, but sometimes folks don't actually do the planning to understand what that actual number is. And so to the extent that you can, whether you did it as part of your business plan or it's something that you can do now based on a year or two of financials, I think understanding that number is really, really important.
Great, thank you. The next question is really similar to that, I think, in some ways that I didn't anticipate ahead of time. So if it feels like your answer is the same for this one, that's fine. You can just pass. But if you have anything to elaborate on for this part, what are some practical ways to avoid dipping into personal funds during slow months or panicking during busy ones?
So, I kind of mentioned access or cash. It's having some sort of reserve fund
Mhm.
that you can access um, when the times are slow, whether it's a line of credit, a HELOC, a home equity line of credit, or just some funds that sit there that you can tap into. And I'll give Ank as a perfect example in that we often have a huge accounts receivable. So we're owed a lot of money, and we have a line of credit that we can access to get us through those periods when our receivables are really high. Similarly, if you can have, because whether it's seasonal in nature or whether it's slow payers who owe you money, having some reserves that you can tap into, I think is huge. Um, it's not, I know for myself, when I had a home equity line of credit where I did put my house up as collateral. Um, that's a personal choice. Um, Sometimes it's the only way to do it because banks and Jamie will like they often want some sort of collateral to secure the loans. But credit cards are another one, but the interest rates and the interest that you'll pay if you use your credit cards to do that is it's considerable. So if you can do it in a less interest heavy way, it's a better way.
Great, thanks. Jamie, do you have anything to add for that part?
Yeah, I would second the line of credit. It's even if you don't use it, it's nice to have that in place to fall back on. Um, to that, I would also add, um, before you even get to a cash crunch, I think it makes a lot of sense to kind of have some of your strategies in place already to stretch cash. I think it's very helpful when you know which vendors you can maybe stretch payments with a little bit on the accounts payable side. Um, I think it makes a lot of sense to periodically revisit the way you collect from your customers too. We have some clients who have transitioned away from mailing invoices to now emailing invoices and using credit card payments just to reduce kind of that cash conversion cycle. And again, I'm going to seem a little biased, but I think it also makes a lot of sense. If you have an existing relationship with a lender, you have an existing loan, stay open and honest with them. Maintain that line of communication with them because when times are tough, they may be willing to offer you some relaxed terms. They may defer a payment for a month or two. They may be in a position to offer interest-only payments. Those things will help you stretch cash flow a little bit during the tougher times.
Hmm. Yeah, good point. Good communication can go a long way. So this is a little bit of a different approach here. So for folks who don't love spreadsheets or maybe don't feel like they're super comfortable with accounting and spreadsheets and that kind of thing, what systems have you seen work well for people, or what tips maybe do you have for people to kind of keep those things straightened out and clear, their personal and business finances. Any tips around that? Jamie, do you want to take this one first?
First of all, it's a silly question. Everybody loves spreadsheets and accounting. Um, yeah, what's when it comes to accounting, bookkeeping, tracking of revenue and expenses, from AEDC's perspective, this is by far the number one need of our clients, whether it's the loan side of the house or the business counseling side of the house. This is the number one need by far. And other than getting training in that area, what I'm seeing is that more of my clients are now they're leveraging, if it permits in their industry, these point of sale systems to kind of track revenue more easily. And they have, in some cases, the flexibility to build in expense tracking too. So it kind of gives them a way to get the complete picture of their profits or their revenue and expense streams coming in and out of the business. That's been helpful. Doesn't get them all the way there, but it does help considerably with regard to having records that you can then pass on to bookkeepers, tax preparers, things of that, people of that nature who can ultimately produce the final reports for the business itself.
Yeah. So almost like automation to some extent,
It
as much as
is.
you
It
can get kind of
is.
done for you. Yeah. Cool.
Yeah,
Okay.
I think.
Thank you. Kim, how about you?
Yeah, and along those same lines with automation, so I have a business and I use QuickBooks Online, and it is integrated with my bank accounts. So the bank feeds automatically get loaded into QuickBooks, and I can access it either via a computer or via my phone. And I go through on a regular basis and look at those expenses or revenues that are coming in and assign them different categories, like expense categories and that kind of thing. Sometimes you can set up rules so you know that if a charge comes in from um, a particular inventory vendor, you know that's inventory. But ahead of going to social media or whatever it is you do on your phone, like just once a day or every couple of days, go through and it'll be a feed of transactions. And it really just lets you stay on top of those things. So it isn't a month down the line and you're like, I have no idea what that was, right? And it just it takes care of the finance and the accounting aspects of it because it's really just assigning an expense category. And I know in a second, this is also a great way to tag personal expenses. So when you're using software like QuickBooks, you have an expense category, but you can also assign tags. So you could have a tag that is personal. And so you can go in and again, kind of in this real time thing, or every couple of days, go in and the software itself will do the behind the scenes P&L and balance sheet and those kinds of things. So the lift is within QuickBooks. And my other piece of advice is if this is not your lane, like if it it really kind of needs to be your lane, but I get it because really understanding your numbers in your business is so important. But if it's not your lane, find somebody to help you. And it could be your niece who's an accountant. It could be, a friend or someone. It could be somebody that you pay, but and have them teach you along the way. Because it's pretty important. But yeah, I would say QuickBooks Online is a great tool. And if you use they have solopreneur versions and they have versions for really small businesses. And it's still probably $30 or $40 a month, but in my opinion, it's really worth it.
Awesome. Thanks, Kim. All right. So when people do make mistakes, which I'm sure is bound to happen sometimes, what are the most common mistakes you see around tracking expenses and which ones are actually fixable later? And I know like it'd be hard to be maybe super specific about this, but if you can give us any thoughts around that, that would be helpful. Kim, do you want to take this one first?
Yeah, and I kind of mentioned it in my last, it's like
Mm,
waiting too long,
yeah.
so that you kind of lose track of where revenue came from, um, what the different expenses are. And I know when you write checks, you can refer back to those, but so much happens these days with electronic funds transfers, EFTs. Um, and you hope you know, but like I know myself, sometimes I'll make a deposit and like I'm trying to be much better about this, but months would go by and I'm like, I have no idea what that deposit was for. I don't and that's not good. So just trying to again, whether you put it in your calendar where once a week, once a day, you're going to go and just check that stuff. I would say that's probably a good one.
Great, thanks. Jamie, common mistakes and which ones might be fixable later versus not fixable later.
Sure, sure. Piggybacking on what Kim said, I would emphasize that it's critically important to look at your historical data. Um, again, looking at some of the clients that I deal with, one of the riskiest periods for a new business is year one. In year one, startup businesses are trying to calibrate their model. They're trying to figure out optimal staffing, the best hours of operation, when their revenue is materializing more or less. And, the businesses that ultimately succeed take that year one data and they use it to kind of right size and optimize their operations so that when year two rolls around, they've got a manageable cost structure in place. They know when their key revenue is flowing in and they know when to essentially, again, right size during seasonal fluctuations as well. Again, using that data is critically important.
Great. So capture the data and use it. Good
Yeah,
advice.
absolutely.
All right, this is one where we could go easily very far into the weeds. So trying to keep it at a kind of a higher level. How does separating finances help when tax time rolls around? Why might that be important in that specific case? Jamie, do you want to take this one first?
Yeah, I think it's a situation where, when you segregate your records, there's less of a likelihood that you're going to overpay on your taxes, number one. And again, you're maintaining clarity and transparency, especially in the eyes of the IRS. Um, that's important. Again, speaking from a lender's perspective, if you're a growing business and you're looking to build a financial relationship with a bank, you want to avoid outstanding tax issues because that's a red flag, from my vantage point. Mainly because the IRS always gets paid first. And if you have outstanding tax issues, it could significantly impact your ability to get credit and ultimately grow as a business. So I think separating those financials and having separating those finances and maintaining those clean records from a tax standpoint is pretty important.
Great. Thank you. Kim.
Yeah, and one of the things we talk about when business owners are thinking about selling their business, if you're the kind of person that has been kind of commingling your personal and business related expenses, um, as you get closer to wanting to sell, or if you are able to predict when you're going to be needing financing, lenders are very, very conservative and they need you to have shown a profit and a whatever size profit. So while it may seem counterintuitive, paying taxes, like showing a profit on paper and with the IRS, I know it's painful, but it depends upon what your long game is. And so understanding what is personal and what is business related is kind of number one, and then being strategic around what you do run through your business and what you don't is important. Like we say with valuation, a seller's going to have a valuation, right? Because they're going to have run a bunch of things through, but they know what it is. The buyer's going to disallow some of those expenses that were run through, and then a lender is going to disallow even more. Like very often lenders, when they are looking at valuation, the only thing that they will let you add back is an owner's pay because that's the most obvious. Whereas if you ran your life insurance, your health insurance, your car, your cell phones, this, that, and the next thing, it gets grayer in terms of the valuation. So really understanding it and being strategic about when you run them through or don't run them through is important, depending upon what your goals are.
Great. Thank you. All right. So we've talked a little bit about this already, like some of the good habits that people can establish, keeping those good records, looking at them sometimes, being familiar. If there's anything else related to habits, what's one habit that can prevent those kind of uh-oh moments when it comes to taxes or cash flow or even valuation down the line if you're trying to sell your business? Um, and this time, Kim, do you want to start with this one?
Sure. Yep. I think we've kind of talked about it, is just having visibility into the dips in your cash flow. Like if you have a seasonal business, really understanding when those negative months where you have negative cash flow is important. And I know it's way easier said than done, but just planning for those to the extent that you can, and tracking your progress against your plan. And trust me, I know when you're fighting fires of owning a business, that's the least fun stuff to do. Um, but it is kind of important.
Thank you. Jamie.
Yeah, Kim touched on the importance of cash flow and in the importance of just planning. I would add to that, as a small business owner, regularly ask yourself the right questions with regard to cash flow so that you have a handle on, for example, on average, how long does it take you to collect from your customers? On average, how long does it take you to basically pay your average invoice? If you have inventory, how often does it turn over? Having a handle on those types of questions, I think, is a good starting point for managing your cash flow throughout the course of the year.
Great. Great advice. Thank you. All right, we're going to do one more of these and then we're going to move on to our Q&A session. So the last one here that we're going to do today is for small business owners who feel like they might be behind or they are not doing things right for whatever reason. What do you want them to know? Jamie, you can start with this one if you want to.
Yeah, my message would be it's perfectly fine to ask for help and get help. Whether it's paid, unpaid, seek out those resources. And that can range from anyone from an attorney to a bookkeeper that you're paying for their services, where you're paying for their services to an entity like AEDC or ANCA, where you may be able to leverage some of their resources free of charge just to help you get a better understanding of how to manage and optimize your business. Get help if you need it.
Yeah, great advice. Small Business Development Center is another great
Yeah,
resource that
Absolutely.
exists in most places that I always like to
yeah.
shout out to. Kim.
Yeah, it's I think sometimes we feel like we go off a cliff, right? It's just kind of overwhelming and you kind of stick your head in the sand. And maybe like I actually do this with with my own kind of to-do list kind of things where like Tuesday for 20 minutes I do X, and Wednesday for 20 minutes I do Y, and Thursday for 20 minutes I do Z. And so it kind of breaks these um just like this overwhelming there's just so much going on, whereas if you kind of break it down in bite-sized pieces, it feels way less, and you have an assigned day to um, send out your invoices, right? One day you send out invoices, and one day you whatever the critical tasks are, break it down into small bite-sized pieces, and you'll like slowly get caught up. And again, this could be in keeping your house in order or but it was a tip that I got from someone, and it really is helping me at least.
Great, thank you. Jamie. Or did, wait, you already did this one.
I did,
All
yes.
right. Any last words for that stuff, or we'll move on to Q&A?
And Lauren, I know if you were going to do if we only did one thing.
Yeah, yeah, yeah. If there's a specific, sorry, go ahead.
Are we going to wait on that one?
Nope, you can go ahead. Yeah, we can. I was just feeling like maybe it was getting redundant, but if you feel like you have one you want to do for that one. Okay, so if someone only improves one thing after today, after attending this session today, what would you hope it is?
So for me, I would just say, just take your financial acumen,
Mm,
um, either just make one small step, um, and write it down. if it's like I tell people, the more granularly you can understand the finances of your business, the more you'll be able to make strategic decisions around how to grow your business. So for example, and this kind of gets into the weeds a little bit with QuickBooks, but um, within QuickBooks, you can have classes and you can have different lines of business. So let's say, for example, you have a health food store or something, and you have the deli and you have supplements and you have, different areas of your business. I had a ski bike and board shop, and I had service, and I had leasing, and I had, soft goods retail, and I had hard goods. And understanding the profitability of the different lines of business allows you to grow your most profitable aspects of your business. And so just to pick one thing to increase your financial acumen, because I know it's not, if you're not a numbers person, it's hard, but make baby steps in terms of improving your financial acumen.
That's great. Thank you. Yeah, it can be overwhelming, I think,
It
sometimes.
totally can.
Which step do I start with? So
Yeah.
that's great advice. Jamie, do you have something to add to that?
Yeah, I agree with baby steps. And I think from the standpoint of financial management, whether you decide to go it alone or bring, outside assistance, however you want to build that infrastructure, I think it's critically important that you start now. Do the work up front because I think it's going to relieve a lot of potential pain down the road.
Thank you. If we see you next time, which is going to be in a couple weeks, we'll have another one of these sessions. And yeah, we have a bunch of other great topics coming up. So that might be relevant for you and your business. And with that, I hope you all have a great day. Take care.
Thank you very much.
Thank you.
Thank you. You too. Bye.